Okay, good day, guys. So, okay, this is my first long video I'll be uploading on YouTube. So, this is going to be the first long video I'll be uploading. Well, for some time I'll be uploading reels on YouTube, but today I'll be uploading. This is my first long video on YouTube. So today, basically, what we're doing and what I do is to actually trade. I trade the financial markets where we trade stock, crypto, bonds, stock, and the rest of them. So, okay. So basically, today what I'll be discussing is, okay, I'm Mamba, Mamba by name. People know me as Mamba. Where I trade the financial markets. I trade currency or the stock, the bonds, crypto, and the rest of them. All financial assets in the financial markets. I do trade them. So basically, I'll be dropping some informative content on YouTube where we discuss various aspects of the financial markets, how the financial markets work, the capital markets, the money markets, and all instruments traded in the financial market. So today, basically, we're going to start with Forex now. Actually, I was supposed to drop a video on discussing everything you need to know about the financial markets. But first of all, because Forex now, as you all know, Forex is also an aspect of the world's financial markets. So today we just because I was supposed to start with at least the major intro, which is what is financial market before moving over to what is Forex, moving over to market structure, how to spot your other blocks, your liquidity, your support and resistance, and the rest of them. So basically, I also basically we just start with Forex now. So Forex now actually stands for what? Forex is an aspect of the world financial market. In the financial markets now, okay, let me just give you a little intro about the financial markets. So now, so you can see this is my gold and this is my gold. So okay, so what is financial market now? The financial market is a place where people buy and sell financial assets. And financial assets could be like money, stock, bonds, currency, or commodities. Your commodities are your gold, your US oil, your silver, your platinum. Those are all commodities. And everything are actually traded in the financial market. So it allows individuals, companies, and government to raise capital. That's one important aspect of the financial market. Capital capital raising is just like a source of what capital raising to raise capital to invest and what manage risks now. Okay, so this statement is actually telling you that individuals, companies, and government are also involved with what financial market. They all trade in what financial markets. So now, just like think of it as okay. Let me explain it in layman's view now. Think of the financial market as a what big marketplace now, or instead of what maybe you know now a marketplace where you buy clothes, fruits, vegetables, and the rest of them. Instead of now those things to be traded in the market, what you trade now is what you call money and what financial products. That's your what your stock, your bonds, and the rest of them. So in a layman now, a market is a place where buyers and sellers interact to what to get the products. But in the financial market now, instead of you selling where you exchange maybe clothes for money, books for money, and the rest of them, it is now financial assets and what money that are traded in what financial markets. So now we have types of financial market. We have the what stock market, the bond market, the forex market, the commodity market, the derivative market, and what money market. So those are the what types of markets we have: stock market, bond markets, forex markets, commodity market, derivative, and the what money market. Now, for stock market now is this is the market where shares of the companies are bought and what sold. Imagine now, okay, I want to buy shares of Stess and maybe okay, let's use a very popular company now in the USA. Okay, I want to buy shares of maybe a little shares of Facebook now. I have to go to maybe Wall Street now. Tell them, meet my broker, tell them I want to buy so amount of shares of Facebook shares. They sell it to me, I give them money. That is what the stock market is involved. Imagine now, okay, I want to buy, okay, Nigeria now, okay, I decide to buy own a share in the Dangote Cement Group now. I go to Nigeria Stock Exchange now. I, I meet a broker, I tell them I want to buy so amount of shares now from in Dangote Cement Group. I pay them the money, they give me the source amount, they give me the necessary documentation. So I'm now part owner of the what Dangote Cement Group. So stock is just like is a type of market where it makes you eligible to be part owner of that what company now but with that with the stock you just purchase, you are eligible, you now have access to what that company. You are now so now we also have what we have the stock market, the bond market. So bond market is where governments or corporate bonds are traded now. Governments are what corporate bonds are traded in the what bond market. And bond market is a type of market whereby will I say it's kind of like a loan market. Maybe you see an investor now, you lend money to an individual for a specific amount of time, a specific amount of time which is having interest rate and what maturity period. That specific amount of time is actually the maturity period. Imagine now, okay, I'm an investor now. I'm the lender now. Then someone now, the borrower now needs money. Probably since I'm now the lender, I lend. Okay. Let's just take it from this angle now. In the bond market, we have what you call the borrower. This person borrowing money, and we have the what lender now, the person actually giving out the money. Okay, I'm now the lender now, right? I'm lending the borrower so amount of money now. Probably I'm lending the borrower probably 50 million naira worth of bonds now. I give it to the borrower. I giving it to the borrower now. I say okay, after it has a maturity of 2 years, it means after maybe okay, a maturity of 1 year, it means after 1 year, that individual now, which is the after 1 year now, after 1 year, it means that borrower now is going to pay me okay, it has interest rate of maybe probably 10%. It means after 1 year now, that borrower is going to pay me my 50 million naira worth of bonds I sold to you, plus also the interest rate that came with it. That is how after its maturity has expired. So and bonds is a type of investment whereby investor lend money towards companies, governments in exchange for what interest. But bonds now some will say bonds are like will I say low risk, low return type of investment. The risks involved attached to bonds are usually low, but the returns are also what low compared to what the stock market and the what forex market. So basically this is what happens in bonds market. The next is what your forex market now. Now forex market okay will I say is the major and the largest type of what financial markets now. Is the largest type of financial markets. Over $7 trillion is actually traded in the world forex market every day, followed by the stock market, then your bond market and others. So for the forex market now, the forex market is where currency are actually traded now. Imagine now, okay, it's also called what foreign exchange now. It's a global marketplace now where currency are bought and sold. You know now, who actually what buy currency and sell those currency to what make profits. Or is usually and currency this currency market is a way whereby um is a way of exchanging money was for business. Imagine now me going, okay, I'm in Nigeria now. I go to United States. I can't spend naira in that country, right? I want to exchange my naira with me now to what to US dollar in that place. So probably I go to a currency exchange, a bureau de change or a place where currency exchange, and I change my naira to what to US dollar because it's only US dollar now I can use as a medium of exchange in that country. Same with if a foreigner comes to what to Nigeria, he or she has to change the currency he or she is with to our what to naira now before he or she can what can use it here. So basically now this is where forex market comes in. Think of it now, maybe I exchange USD now for Europe when traveling to Europe. I have USD now. Then I go to what? If an European, I go to an European country now using Europe now. Me going to that country now, I send my USD for what? Europe. Because Europe is what? Medium of exchange in that what country. They don't accept USD. So this is where the forex market actually comes now. Now, forex now is like I told you, like it's the what biggest market in the world with having a trading volume of close to what $8 trillion a day. And it's actually open 24 hours a day, 5 days a week. That is how long the forex market is open, 24 hours a day, 5 days a week now. And now I told you that currency is what are usually traded in the world what in currency markets, what is usually currency that are traded in the world forex market. Now, okay, someone ask say this type of okay, forex is always traded in pairs now. And these here are what you call what your pairs now. These are the currency pairs now. You can see now for this is your Europe towards USD now. You can okay Europe to USD now. Look at Europe to USD. This is your Europe towards USD now. So you can see now it means now the first currency now which is the Europe is called the what? Base currency. While the second one which is the USD is called the what? Old currency. It means now if Europe USD is exchanging at maybe 1.178 now at this moment. It means one euro now is equals to what 1.178 at that point. That's what it actually means now. So it means I'm exchanging 1 euro now for what 1.17 USD at that moment. And now basically what forex market actually does is that now you buy a currency, maybe you are anticipating the currency is about to rise now. You buy it when it is selling because you are expecting it to what increase in value. You buy it, you buy that moment. Then when it increases now, you sell it when it's what rises. You've made money. Same thing with what sell now. You sell a currency, maybe a currency is you are expecting a currency to what to decrease in value. Are you listening now? You sell that currency before it decreases. Then once it decreases, you buy it. You buy it at lower price, then sell it off. That is basically how forex works now. And major currency, maybe while the major currency, minor currency, you also have your exotic currency. And your major currency are your USD, your Europe, your JPY, your GBP, that's your British pound, your Australian dollar, Canadian dollar, and your Swiss franc. Those are all major currency. Then we also have your minor currency and your what exotic currency. Your minor currency could be all these. Your minor currency could be all these. That's Mexico. Your maybe your South Africa rand. Probably your minor currency could be your probably okay. These are maybe okay. Well, let's say there are currency that are not the US dollar, and this could be your Europe Australian dollar, your GBP JPY, your Australian JPY. This currency does have the US dollar. They are not associated with the what with the US dollars, but they are also traded at what actively. Now, so that is an aspect on the forex. Okay, you can see now, what forex market, there is this aspect where physical cash are actually traded now, where you maybe you trade your physical currency or maybe your physical currency. Now those are okay, let's say those are called what sports currency, sports forex. Now where these are the type of forex where all these building change are actively involved. Then this one now we do is just like the online, but this type of this forex now also was is kind of is the same thing. Let's say they're just the same thing, basically the same thing. This is when the online where we predict if market will go up or if it's what come down using now your system, your active internet connection and the rest of them. So I told you we're discussing the financial market. So probably now we enter into the going to the your commodity market now. So your commodity market is where raw materials are traded, like your gold, your oil, your agricultural products are all traded in your platinum, your minerals are all traded in the what's commodity market. And people are actively involved in this what commodity market. Then we also have what you call the what money market now. Money market is now is let's say is a short term lending and borrowing. And this type of market is usually with us within 1 year now. It's a market whereby financial assets such as Ripple purchases and these are just treasury bills, commercial papers are exchanged within a period of 1 year between a lender and a borrower between a period of 1 year. And this type of market is also is actually a low risk, some of those financial instruments traded in the money market are the low risk, low return type of investment, while some are the high risk, high return type of investments. So basically, this is just so like I said, financial market is actually important because it helps what to raise capital. Companies actually get money from when they're actively involved in the financial market. It's also foster economic growth, facilitates investments, help business to grow and boost the economies. And it's also it's actually it's actually creates liquidity when you can easily buy or sell what assets. So basically this is just everything you need to know about the financial market. So in my next video I'll start with intro related to what the forex exchange. This going will be talking about the days and post pairs. We'll also be talking about your spread, leverage, bids, your bid and ask price, margin, and everything you need to know about the world forex market, starting forex market, the forex market. So I remain Mamba. I mean, please subscribe, like, and comment on my video. This is my first video. With time, it gets better. Thank you.